Welcome to EquityVistaar. The Indian economy stands at a crucial juncture as we anticipate the Union Budget for fiscal year 2026. The budget is expected to outline a roadmap for sustainable and inclusive growth. It must address key issues like inflation, employment, and infrastructure development. This budget preview delves into the expected fiscal trends, sectoral allocations, and potential challenges for fiscal year 2026. We will examine the projected fiscal deficit, nominal GDP growth, and their implications for the economy. Understanding the government's priorities and the potential impact of its fiscal policies is crucial for businesses, investors, and citizens alike. The fiscal year 2026 budget will be a key indicator of the government's strategy to navigate these challenges and steer India towards a path of sustained and inclusive growth. The fiscal deficit, a key indicator of the government's borrowing requirement, is projected to remain a concern in fiscal year 2026. While the government aims to consolidate its fiscal position, achieving the targeted deficit reduction may prove challenging. Global economic uncertainties and the need for continued public investment could exert pressure on government finances. Nominal GDP growth, a key driver of government revenue, is expected to moderate in fiscal year 2026 compared to the previous year. However, robust domestic demand and government spending are expected to provide some cushion to the economy. The interplay between fiscal deficit and nominal GDP growth will be crucial in determining India's fiscal health. Prudent fiscal management, coupled with structural reforms to boost investment and productivity, will be essential for achieving sustainable and inclusive growth in the medium to long term. The fiscal year 2026 budget is expected to focus on incremental reforms and targeted incentives to stimulate economic growth. The government is likely to continue its emphasis on infrastructure development, particularly in areas like roads, railways, and logistics. Investments in these sectors are crucial for improving connectivity, reducing logistics costs, and attracting private investment. The agriculture sector, a key employer in the Indian economy, is likely to receive significant attention in the budget. Measures to enhance agricultural productivity, improve market linkages, and provide income support to farmers are anticipated. Tax incentives and policy support are expected to be directed towards promoting manufacturing, particularly in labor-intensive sectors. The education and healthcare sectors are also likely to receive increased allocations in the fiscal year 2026 budget. The government's revenue mobilization strategy will be crucial for funding its expenditure priorities in fiscal year 2026. Gross tax revenue, comprising direct and indirect taxes, is expected to grow at a healthy pace, driven by continued economic growth and improved tax compliance. The government has been focusing on widening the tax base and leveraging technology to enhance tax administration. Corporate tax collections are anticipated to remain robust, supported by improved corporate profitability. Personal income tax collections are also expected to grow, driven by rising incomes and increased formalization of the economy. Non-tax revenue, comprising dividends from public sector enterprises, spectrum auctions, and other sources, is expected to contribute significantly to the government's coffers. Efficient tax administration, broadening the tax base, and unlocking value from non-tax sources will be essential for ensuring a sustainable revenue stream and supporting India's growth trajectory. This analysis is based on current trends and projections. Please consult financial experts for personalized advice before making investment decisions.